everyone, welcome to Tax Tips Tuesdays. And on today, I wanted to talk to you about deductions. We have two types of deductions. There is standard deduction and itemized deductions. Now, what deductions do is it takes a amount off of your regular gross income that will not be included in the taxable income. Now, for a standard deduction, there is a standard amount based on your filing status. If you are 65 years or older and blind, then you would be able to get an additional deduction on top of the standard deduction on your gross income so that it won't be involved in your taxable income. Now, not everybody qualifies for a standard deduction. For example, if you're married filing separately and your spouse itemizes their deduction, then you have to itemize your deductions too. Now, if you are a non-resident alien or even a dual citizens alien, you cannot file standard deduction. And lastly, you cannot file standard deduction if you have a short-term year. Now, certain entities cannot file standard deduction either, like estate and trust, common trust funds, and partnerships. Now, with standard and itemized deductions, you will usually pick the one that will give you back a higher deduction on your taxes. Now, with itemized deductions, you'll be able to deduct certain things off that you spent your money on throughout the year. For instance, it will be medical and dental care expenses. It will be any charitable contributions you have made, whether it be cash or non-cash. Then we have the home mortgage interest. You'll be able to have as a deduction. Then we have casualties and losses, and that's for personal, and that is dependent on if it was a federally disaster declared for that casualty or that loss with damages, losing your home, whether it was a fire, whether it was a storm, a hurricane, or a tornado disaster, something like that. You will be able to deduct those losses as an itemized deduction on your tax return. Other types of itemized deductions that could be used is federal estate tax on income, fines or penalties, gambling losses up to your gambling wins, and you will have to inform IRS of all your gambling wins in order to claim that. Any losses on Ponzi scheme investments, repayments of more than $3,000 on a claim of rights, unlawful discrimination claims, and that concludes the small breakdown on what deductions are, standard and itemized. Hope this helps. Thank you all for tuning in to Tax Tips Tuesdays. Bye.